Hello, guys. Welcome to Patient Wealth Academy. I know there's been a lot of activity in the market right now, and everybody wants to know, has the market actually reached the bottom or not? So, obviously, we've seen market corrections before. The most prominent one in the past few years was during March 2020 when COVID came in the US. And I don't have a foolproof way to predict when the market has reached the bottom, but I have I think, figured out a way where you can predict when there's an upward movement after a market bottom has been reached. And the way to predict that is for you to look at the 5-day average index divided by the 10-day average index. So if the 5-day average index is higher over the 10-day average index, that shows the recent prices are higher than the 10-day prices. So let's look at 2020. Okay. So Nasdaq started declining in February, and then in early March we saw a much bigger drop. So we saw a 7% decline on March 9th, a 9% decline on March 12th, and a 12% decline on March 16th. And on March 16th, the 10-day decline was 23%, and the 20-day decline was 29%. We also saw trading volume hitting a peak, which means a lot of people were selling during this time. Now, I am mentioning volume over here, but I don't think it has a direct correlation in terms of determining when the upward movement has started for the market after the bottom has been reached. So the Nasdaq actually hit a bottom on March 23rd. And then 3 days later on 26th, the 5-day average index over the 10-day average index reversed sign from negative to positive, showing that the downward trend has now reversed to an upward trend. And at the same time, we saw the 10-day trading volume drop by 21%. So that was a sign that, okay, now we can start buying because the market bottom has been reached during that time period that we're looking at. Okay, let's look at a couple of other examples. So overall, 2022 was actually a bad year for the markets, but let us specifically look at um, June. So on June 13th, Nasdaq fell to a monthly low with a 5-day decline of 10%. And then on June 16th, the Nasdaq hit a bottom where the 30-day decline was negative 18%. And a few days later, on June 24th, the 5-day average index over the 10-day average index reversed sign, which showed the downward trend has changed to an upward trend. Now let's look at 2023, where in October we saw a market correction happen. So the Nasdaq hit a bottom on October 26th, where the 30-day decline was 10%. And then on October 27th, we saw the trading volume drop by 15%. And on November 3rd, the 5-day average index over the 10-day average index reverse sign, again showing that upward movement. Okay, so now let's look at August of this year, 2024. So on July 30th, the Nasdaq 10-day decline was 7%. And then the Nasdaq actually hit a bottom on August 5th, where the 10-day decline was 10%. And on August 12th, the trading volume dropped by 15%. And then on August 14th, the 5-day average index over the 10-day average index reversed sign, showing that upward movement that we have seen in other periods as well. Okay, so now let's look at market returns. So the whole point of determining this upward signal is to see how do my expected returns compare to if I can perfectly time the market at the bottom. So if you look at March 2020, if you perfectly time the market, your 1-year return was 89%. Versus if you waited for the upward signal, your return was 66%. So you're seeing a difference of about 20%. However, if you actually bought a little earlier than the market bottom because that decline had started um, beginning of March, and you bought on the 10th of March, your 1 year return would have been 56%. So waiting for that upward signal is lower, 20% lower than the market bottom, but it is 10% higher than that earlier bottom that you mistakenly predicted. Now let's look at 2022. The difference in the market bottom and the upward signal return is about 10%, and the same goes for 2023 October. So, in order to lower your risk of not losing out based on your prediction of an earlier bottom, I think it's maybe better to wait for that upward signal for you to maximize your returns while lowering your cost. All right, guys, that's all from my side. Thank you for listening and see you in the next video.